Getting approved for a USDA loan is a huge step, so first off, congratulations. But I know from experience, this is where things can get confusing. What happens next? When do you make an offer? How do you know if a home qualifies? In this video, I'll walk you through what to expect after approval so you can move forward with confidence and avoid unnecessary delays. What does approved actually mean? If you're getting a USDA Guaranteed Loan, being approved means you've been approved by a USDA approved lender. If you're getting a USDA Direct Loan, it means you've received your Certificate of Eligibility, or COE, from your local USDA Rural Development Office. And just in case you're not familiar with how to get that, you start by calling your local USDA Rural Development Office and ask for the Direct Loan application. Once you apply and your file is reviewed, you'll receive the COE. That COE will tell you your eligibility amount, any required next steps, and whether you're cleared to begin house hunting, or if you need to wait. Sometimes you'll get the COE, but you have to wait maybe 2 months or 6 months, for instance. It's best to check with your Rural Development Office to get the current wait time. If you're unsure about your current status, definitely reach out to your contact at the USDA office for clarification. So what happens next? Getting approved means you're ready to start shopping for a home, but it's not a final loan commitment yet. Think of it as your green light to start looking, but there are a few big steps before you get the keys. Step 1. Find a real estate agent. You can start house hunting now. I recommend connecting with a real estate agent, ideally someone familiar with USDA loans. This is especially important for USDA direct loans since they work a bit different than typical conventional or FHA loans. In my experience, there aren't many agents out there who really understand how the USDA direct loan works. So your best bet is to find someone resourceful and willing to work closely with your loan officer or your USDA contact to make sure you're on track. The USDA loan can be tricky, so if you're not sure where to start, I have a USDA Quick Start Guide on my website, workwithdang.com. I can help you find a real estate agent in your area. There's more information on my website. Step 2. Search for eligible homes. Make sure you're only looking at homes in USDA eligible areas. Some neighborhoods sit right on the edge of eligibility, so it's important to verify each property. You can use the USDA eligibility map to check the address. I'll include a link to that in the description. You also want to make sure the property type qualifies. It has to be your primary residence and it needs to be a single-family home. You can't buy a multi-unit property like a fourplex. With direct loans, you can buy a duplex, but you can only buy one side of the duplex. These loans aren't for investment properties or becoming a landlord. Condos, townhomes, and manufactured homes can qualify as well. Step 3. Know the property condition and price limits. Properties need to be modest in price and size, no luxury homes, and no in-ground pools if you're using the USDA Direct Loan. The home must also be in decent condition, not a major fixer-upper. USDA loans aren't designed for renovation projects. The property should essentially be move-in ready. If you're unsure whether a property meets these standards, check with your real estate agent or loan officer. For USDA Direct Loans, your local USDA office may have additional steps or requirements to confirm the home's eligibility before you make an offer, so be sure to ask about that. Step 4. Make an offer. Once you find a home you like, you'll work with your agent to submit an offer. You can include a USDA financing contingency if that's common in your area or required by your lender. You can also ask for seller-paid closing costs if needed. Once your offer is accepted and you're under contract, your agent will send the signed purchase agreement to your lender or USDA office. Step 5. Home inspection. Now's the time to schedule a home inspection. Once the report comes back, share it with your lender or the USDA office if you're using the direct loan. This is to make sure there are no issues that would prevent you from closing. Step 6. Final underwriting and appraisal. For USDA guaranteed loans, the lender orders the appraisal. They review your full file and then submit it to USDA for final approval. USDA reviews your income, assets, credit, property eligibility, and debt-to-income ratio. This usually takes a few days depending on the USDA's backlog. Typical closing time is around 30 days. For USDA direct loans, the USDA orders the appraisal directly. If repairs are required, you may need to negotiate with the seller or set up a repair escrow. Just know that for USDA Direct, major repairs often have to be completed before closing unless USDA approves an escrow arrangement. USDA reviews your full file again before issuing final commitment. From the start of the contract to close, it can take 90 days, and delays are common, especially if the appraisal comes in low or the USDA is backlogged. Step 7. Final approval and closing disclosure. Once the loan is approved, you'll receive your closing disclosure, which shows your final loan terms and closing costs. Review this carefully. Pay attention to the loan amount, interest rate, monthly payment, and any fees being rolled into the loan. For example, with USDA Guaranteed Loans, there's a guarantee fee, which is 1% of the loan amount, and that can usually be rolled into the loan. There's also an ongoing monthly guarantee fee. Step 8. Closing. Before closing, you'll do a final walkthrough of the property. Then you'll go to a title company or attorney's office to sign all of your final loan documents. Once the loan is funded, you'll officially become a homeowner. For USDA Guaranteed Loans, the loan will be serviced by the private lender, and you'll make payments directly to them. For USDA Direct Loans, your loan is serviced by the USDA. Be sure to confirm how and where to send your payments. Some borrowers have experienced confusion, so it's best to ask your USDA contact in advance. If you received a payment subsidy, meaning your interest rate is lower than the standard direct loan rate, your file will be reviewed each year to determine if your subsidy needs to be adjusted. Even though it's a zero-down loan, you might still need to bring money to closing unless you receive full seller-paid closing costs or another form of assistance. Here are a few common mistakes that can delay or derail your USDA loan after you're approved. Falling in love with a home that's not USDA eligible. Always check the map. Making large purchases or opening new credit. This can hurt your credit score or increase your debt-to-income ratio. Changing jobs or income without telling your lender or USDA office. Not budgeting for moving costs, utility deposits, or other upfront expenses. Letting your certificate of eligibility expire for direct loans. If that happens, you may need to reapply and submit updated documentation. If you just got pre-approved for a USDA loan, now you know exactly what to expect next. Check out this video on common mistakes to avoid with the USDA loan. Please like, comment, and subscribe. It motivates me to keep making more videos like this.